What's up, everybody? Today's January 12th, 2024. This is week 5. Last week we had to skip a week, um, but we're just continuing on with week 5 to this week. So we'll just kind of consolidate 2 weeks together. Uh, this week we'll be jumping into RSI lesson and how it can help you or prevent you from making a wrong decision to get in a trade. Um, One of the things is you have to in the pre-meeting we put or we gave Luna the cat a grade B setup to get in, and that's higher lows off the 10 SMA. So he's gonna test that out. Um, for Dell, we gave him a BPR lesson and how to use balance price range uh, using the ICT model. So he's testing that out as well. But this one is maybe if you guys both add the RSI, it's gonna help you with divergence, um, or when a reversal might happen, bounce might happen, um, or when resistance, or when you might be getting towards resistance. Some of the obvious resistance on RSI is the overhot, which is the 70, and the overcool, which is the 30. Those are obvious, but sometimes price action will stay on the top and a top channel, which is above the 50, between the 70 and the 50. So that's telling you that price action is bullish, and vice versa. When it's on the bottom side, then it's bearish. Um, and sometimes it can stay there for a while, just like it did right here. So this is Easy's trade, and this is his grade C setup. His grade C setup is price action, create lower highs, and the break above the 10, break below the 10. Once it breaks below the 10 and confirms it, he gets in. Um, but one thing that can happen sometimes, it's like a force up type of day, and it looped to 10, kind of like it did right here. Looped to 10, came back, and then it squeezes it. Well, and I was in this trade. I got in long over here. Um, and I told him, hey, be careful because the RSI is holding the 50 and it's still bullish. Yes, see the divergence right here? Um, Luna, you asked how to identify divergence.
Yes.
And as soon as once it creates a high and it pulls back, see where the next one's gonna end, or where it might pull back. So this is a lower high. See how price action is still going up, but RSI is going down. So it's losing strength, or you would think it's losing strength, right? Because usually this is what happens. It diverges and then it'll dump. It'll tag the 50 and then bounce back up. Uh, but he got in here. He let me know that he was in. And I told him, be careful because it held the 50 right here, the 50 RSI. I said, it's it still looks like it has strength to me, I told him. And he was like, okay, I'm just gonna let it play out. So once it started holding the 50 right here, I said I got in over here, but I actually got in over here when it started holding the 50 right here. Um, and I told him it was gonna pop. Once it started creating higher lows right here, see how the buyers came in? The sellers were gonna beat right here. They were beating out in that consolidation zone. Remember, you want to take the consolidation zones and look for volume beats. Nothing came close to this, and this is what I had told him. Is nothing came close this whole time over here. I was looking at these two bars and nothing came close. And then I told him over here when we got these two green bars, hey, these ones it started beating out this. So as I look at the volume bars, I'm looking to see if they're breaking or if they correlate. Remember a few weeks ago I said that sometimes the candles don't correlate with the volume bars? That's a big sign. That's a huge sign. So you're thinking the sellers are coming in because they got a red volume beat there, right? Red volume beats there, and they're coming in. And then you start seeing buyers come in. So now you're thinking, okay, now you're tracking this candle breaks above that candle, buyers are coming back in. And that one broke above almost all these other candles. And then what happens right before a squeeze? The candles get sucked down. See how they got sucked down? And they're both green. So where is it going to squeeze to? To the upside. And not only that, look at RSI creating higher highs or higher lows right here. So he was saying like when should I have got in? See over here, it's still his grade C setup, right? It's below the 10. See, price action creates lower highs, and then it breaks the 10, and then it confirms the 10. Over here, look, creates a lower high, even confirms the 10 a couple times. But what's the difference between this price action and this price action? Um, the difference is our size below in the bearish zone. Look at that. That's what you want to see in your play. And this goes to you, Luna, where if even if you see it long, if you see it long, right, you want to see it inverse. So you want to see a break above the 10, come back and tag the 10, and then go up while holding the 10 SMA.
Okay.
Do you get what I'm saying?
Yeah. Yep.
And see over here, see the volume, how the volume gets sucked down, and then look at there's two little red candles. Where is it gonna go? Where is it gonna dump? Dump down. And look at it breaks the moving average. Boom. So those are things that you guys should be paying attention to. When the RSI is gonna tell you, it's gonna confirm. That can be your confirmation. This goes to you too, though. Like try to use the RSI as confirmation, or as a second or third confirmation. If you already got your fair value gap, right? You got your fair value gap tag, and it's tagging the 50 RSI, then it might be a good play. Or if you're going short, it's holding below the 50 RSI. And see these resets right here. You see the divergence right here, Luna?
Yes.
See how it's still going up? Price action is still going up. But then if this is higher, right? This is higher than this higher high than this structure. See how it's a little bit higher?
The other one is lower.
Yeah, over here, this is not lower. You would think this would be way up here higher. So now, look, and this is today. This is not even the same play from the same play that we just seen over here. See the same play right here? Like the same thing. Same thing right here. Why do I say it's the same thing? Because you got the divergence. Remember, you see it higher high, higher high. Okay, what's it gonna do? Does it look like it's gonna top out? Because there's no structure over here, right? So you gotta look to the left. There's no structure. So here's a resistance. If it gets over there, then it's probably gonna squeeze up here because look at this volume profile up here. And is there something right there? There is, look, over here. See this? But that's not logical, right? For it to go all the way back over there. And it's seen lower highs. Okay, boom. Okay, what do I wait for? Right here, I'll wait for the break. Wait for the break of the 10. Come back, confirm the 10 right here. And then look, confirms RSI. And your first target can be the 30 RSI once price action gets to the 30. If you let it ride a little bit, like close in maybe 50%, 75% at the 30 RSI, and then let some ride. If it goes into overcool, okay, boom, you would have caught this big dump right here if you would have let 2 ride. Or 1 ride, you know, if you're playing with 2 contracts. How much contracts are you guys playing with?
I personally do 2 normally contracts.
Same, 2.
2? Okay, perfect. So for the next 2 weeks, you guys are gonna track every trade. You're gonna track every single trade and then just say if it's green or red, green or red. And we're gonna start with 2 contracts. So now we're gonna kind of try to train you how to scale up. Because if you're gonna do a prop firm, some have scale up conditions like Top Step, even though you go for the 100K account on Top Step, and you pass it, and it says 10 contracts right there. But in the fine print, it says it has a scale up requirement. The scale up requirement is it's 1 to 2 contract or 1 to 3 contracts with the 100K account. 1 to 3 contracts. Once you make $1,500, once you're up $1,500, you can go up to 5 contracts. Between 1,500 and 2,000, you could go up to 5 contracts. And then between 25 or 2,000 and 2,500, it scales you up. So I like that. And I've always used that model. I used it with Lasagna Cat and I used it with Easy. And this is one of the things that helps build confidence. Keep in mind, you know, I started out with 1 MES contract making, you know, my daily goal was 25 bucks with 1 MES contract. If you guys are trading ES or NQ, then you'll easily hit. But I want you guys to either trade with 1 or 2 contracts for at least this week, and then take 2 to 3 trades based on your strategy. And then let's, you know, I don't know if you guys have daily goals. But
We
you guys
had,
are trading
5 and 6.
MES? You have MES or ES?
No, we're using sim. So basically our target was 5 and one target was 5 and the other one was 6.
Points?
6 points, yeah, 6 ES points.
Del,
me,
do you have
yes.
any?
Yeah, for me, usually of 2 contracts, because for 1, when I was doing 1 contract, it was a 5. So I would try to do 1 contract for 5, second contract for at least 10 points. Which is like a daily goal, like 75.
Okay. Um, So you guys are both, but you're trading ES, Luna,
Mainly,
Yes.
yeah, and you're trading,
mainly is MES. But like I said, this week it was just a sim thing, but like even though it's sim, but another sim just with NQ. But no, it's mainly MES.
so we're gonna scale you guys up. So you're with two, and it's in sim, right? It's not in live.
Mine is in sim, yes. Oh,
Correct,
Dell?
same sim.
Okay, okay.
Yep.
So we're gonna go with two and then just measure out your trades. If you tell me you're 5 for 5 or 6 or 5 for 6 or whatever, if I know that your confidence should be a little bit higher. And then the next week we'll scale you guys up to like maybe 3 or 4 contracts. Is you guys need to know how to actually properly scale up because you don't want to over leverage yourself. Once you over leverage yourself, you're gonna be, if you usually catch 5 points and then you have 5 contracts, you're catching, almost 70. What is it?
well, I think it's 1 point is
125.
25, right?
Yeah.
Well,
But if you have 10 contracts, then you'd be down 500 when usually, 5 points would be 250 or whatever. So it's teaching you how to do that, so you can scale up. And then we're gonna start getting into market psychology because you always got to ask yourself, why is the market doing whatever it's doing right before data? Is it super high or are they dumping it? Because most of the time they're either dumping it so they can buy it back up during data, or the vice versa. They're pumping it up so they can dump it during data. And sometimes good news is good news, and sometimes good news is bad news, and vice versa. Sometimes bad news is bad news. But you got to think, you can't come in here, right, thinking like a normal person, because a normal person wants lower unemployment. And if you come in and you're a newbie and you're like, yeah, lower unemployment is good. Not when inflation is high. When inflation is high, we need unemployment to be higher. So like that, less people don't want to buy or can't buy. So that brings inflation back down. So that's thinking like um like an investor trader versus a normal person. And some people would think that it's unethical to want high unemployment rate, right? But that's what needs to happen. That's what needs to happen to correct the inflation. Uh, do you guys have any trades we can jump into, or have any questions about the RSI? Like I said, when I start looking at certain levels, either volume profile, ICT, or fair value gaps, the dojis, any structures, I start looking at the RSI to see what it looks like. Is it giving me lower highs? Is it giving me divergence? Is it in the bull channel or is it in the bear channel?
I have a question.
Sure.
How steep was supposed to be that diversion? Because honestly, if you didn't point that out, I wouldn't have seen it. It was so like the one that you just showed us. It was not
This one?
very evident. Yeah, it was not very like Now I'm looking at it. Yes, you're right, but it's very the slope.
You have to train your eyes. And sometimes it can be very, like, see right here, it's kind of flat,
Mhm.
but it's still diverging up, even though it's coming down right here.
Okay.
See right from this area, right?
Okay.
You would think it's coming down, but then it shoots up.
How about if it's going sideways? Not that
Sideways,
the RSI is going up or down and the price is going sideways. Does
like
that
right
make
here.
any? For example, yeah.
You just gotta see where the RSI is. Is it below the 10? Or is it below the 50 or above the 50?
Okay.
And then, but you gotta see, like, okay, right here, where's it gonna go? It's at maximum resistance. So if it's like this, you gotta always look back because there might be structure to the left. That structure might be right here. Watch. If you, it might be on this level, but over here. And right there, look. This area right here.
Mhm.
So if, and then you ask yourself, okay, if it's above, you want it to be above that area. This resistance right here. Before even thinking of getting in long, even though it's below, even though price action is above the 50, you gotta wait for price action to be above this zone right here. Be above this zone right here. Oh, what the heck?
You got horizontal line. I think you need vertical. I mean.
Yeah, you can't see it because of volume, but yeah, this zone right here, where it's just, that's where you would want price action to be. You want it above it. See, because right here, when it's above it, above that zone, see that blue line? And it's above the 50 RSI, then you know it's gonna probably pop up for a little bit more. And then again, it's popping up. Where does it go? It created a lower high. See?
Mm.
Creates a lower high. You always want to, did I show you that? Yeah, even like right here, see how it moves like it's still going down? Look at how steep it is right here, right?
Yeah.
And it's way lower than this side.
Yeah.
Right? So
Yeah.
look at right here. It's way over here. And even it started right here. This is the crazy part. That the divergence started happening with this big move right here. With this big move right here. It happened like it bottomed out. So now that's your low point. So now you're just thinking, okay, where can it go? It can bounce up to the 50 SMA. Your play, right? Your 1050. So you got the 1050 cross right here. Right? So it hits the overcool. It comes up and it over here tags the 200. Creates a lower high right here. Creates a lower high right there. And then it breaks the 50. There. Then you got the MACD cross right there. So it breaks the 50, get the MACD cross, and then you got that lower high. And it broke that line that I was telling you about. So it's creating higher high or higher lows. Look at another, it created a higher low. So once it creates that right here, you're okay. What can happen? You're still in the bear zone down here, so it can still continue going down. You're in the bear zone. But then you got a higher low here, and then it bases. This is what you want to see, basing. Hold the level. Here's a 50% retrace from a fib from the daily candle. Comes down, holds that level, whether it was a 50% or just prior structure. And the structure is way over here. But either way, that was 3 days ago. So it holds that level. It starts to base, right? Because it doesn't break that level. Look at RSI. Still creating higher lows. Right here, look at it. Still higher than over here. So what can happen? Okay, it's gonna pop. Now you're starting to say, okay, it's gaining strength. Right here at this point right here, once it breaks the 10, you're telling yourself you want to pull back to the 10. A pull back to the 10. Look at it. Pulls back to the 10. It's still creating higher lows. It's still going up. Of course, you want to be in the move already when this happens, right? When a big jolt like that happens. But if you're seeing the strength get higher lows, that means it's getting strength. So you see the pullback to the 10. Now you know, still creating higher lows. Now you know that it's going to go up to the 50 SMA. Once it, and then you wait, that would be your target, right? You a higher low off the 10 SMA because you got higher low off the RSI. You got the bullish MACD and spreading right here. So you would get in here and your target would be the 50. But you got to always ask yourself, is it worth my trade to get in right here to the 50 SMA? And from the, if you would get in right here, that's 83 to the 50 SMA to that doji, that would be that'd be 12 points. To me, that's worth it. 12 points on ES, that's totally worth it. So then you get in right here, lock in 50%, 75, and then let it ride because it broke the 50. It breaks that level. Once it breaks that level, you look for the next moving average up or the fib level, which is the fib right here. Or you can use the RSI. You can get out at the RSI overheat. Those are 3 things that you can use as, okay, I can get in or get out right here and it'd be a reasonable point to get out, right? Because you could get out at the next fib level or moving average level, or get out at the overheat. And then let it go. If it keeps going, who cares? Let the next play set up. Don't get FOMO. Just because you got out right here, you're still green, dude. I mean, you got in right here and you rode it all the way over here. I'd be more than happy. Even if you got up to the 50 SMA or the 666 or the 200, like don't get FOMO. And it can do it anywhere. It can do it in the middle of the channel right here too. But it's more favorable when it hits the bottom overcool or the top overheat and then you see it. But sometimes you'll see it doing it off the 50 like this. It'll start doing it like this. And you're like, okay, it's gonna go. But stack it up with your moving average, Luna, and Dell, stack it up with your with the fair value gaps. Stack that shit up and you'll be that much the better. Remember, you want, if it's hitting the 50 RSI and it's hitting the 50 SMA, whether it's on the top or bottom, you want to be, if it's hitting the 50 SMA right here and it's hitting the 50 RSI right here, then it's most likely going to go down, right? But the MACD right here, see the MACD is gaining strength. So, this play right here might not work. You would want all 3 of them to be bearish. But it can be like right here. See how it kept going up, force up. And then you look for a back test or something. Yeah, who took trades? Or are you, any other questions?
Yeah,
Any
I
other
have
questions?
I have a question for you actually about
Sure.
the so basically if you take one of these trades, let's say, and the next moving average is not the 50 SMA, it could be the 100
It
EMA
could be
or
the
the
180, the
or 200.
whatever moving average you use.
Okay, so I should put my target there at that point then, not let it ride, or it depends on the sloping of that moving average.
What was that? I'm sorry.
So basically when you're putting the target, so let's say you enter the trade and your next moving
Mhm.
average, you said to let it ride to the 50, but let's say the 50 was above and there was the 200 first or other SMAs. Do you keep it above them or do you let it tag it and continue, or depending on the strength, what should you do at that point?
Well, it usually moves in stages, right? So it'll go from the 10 to your next fastest moving average. If you're using
Okay.
the 21 EMA, if you're using the 20 EMA or SMA, um, it'll go in levels. The only time that it gets crisscrossed is when the slowest, when all the faster moving averages are all moving above the slowest moving average, which is in our case the 666, right?
Yes.
Uh, that's when it gets a little bit complicated to explain. Let me see if I can get a clean one. Uh,
Well, if you look at the time today's timestamp around well, around 11 or so, the the moving average, the 666, was actually below the 50.
what time?
It was flat. Let's say 11:50 or well, Eastern time, right? So maybe that will be
It was below the what?
the 666 moving average.
Was below the 50?
Below the 50. So the 666 was below the 50 and it was
Mm-hmm.
flat. So if you've got a price action where it's going up right now, would you wait? Would you stop it at the 666? Let's say if your target is 6, 7, 8 points, or you let it right above to the 50.
Like right here, or where are you talking about?
Yeah, in that consolidation area. Uh, yeah. So
So from here going up.
yeah,
So if I was getting in right here going up,
yeah. Let's say with the I'm not sure where's your 666 here.
it's this blue line right
The
here.
blue? Oh, yeah. Okay. So your 50 is above it, right?
No, it's right here, the yellow.
The yellow. Okay. That means a different time than the time before it then. Yes.
Then it would be over here
Right. Yeah. So if
where it's
it's
above it.
yeah, so the idea is, do you stop at the next moving average or like for your target, or you let it means there's more chance to ride to the 50.
I'm not sure I understand your question. So if I'm getting in over here, is that what you're saying?
Okay, yeah. Let's say you got
Is
there
that what
and
you're saying?
yeah, let's say your moving average, the 666 is before
Yeah, it's right
the
here.
50, right?
Yep.
So do you let it go? Let's say the 50 is above that, much more above. Do you let it go all the way?
The situation depends, and the reason why I say that right here is because once we break the level, I'm looking for a retest and then go down
Oh, okay.
because this
Gotcha.
is the slowest moving average, right?
Okay.
Because it's the slowest moving average, that means that it takes a lot more for it to move up or down, and that's why it stayed flat almost this whole time. You see that?
I see. I see it.
Because right here it's in a downtrend, and once it breaks that 666 right here where it broke it, I'm looking for continuation down. but a
Mhm.
confirmation right here to go down. So that time it'll bring the 200, the 50, the 100, it'll bring them all down. That's what I'm looking for. And this is really choppy because it's all like indecision, right? It's all here, it's stuck in the range from here to here. It's stuck in the range. So if you're using just the moving averages, you're like, fuck, well, where the fuck do I get in? And what do I target? Once the moving averages come down like this, right? That's a 50 SMA right there. And we got the 200. And then the 100's already down here. The 10 is already down here, right? So your resistance is going to be the last moving average on top. The last moving average on top up here is a 200. The 200's right there.
Okay.
So even it's coming down, coming up right here, I'm looking for a rejection right here. That's what I'm expecting.
So if it breaks, it means it's gonna go to the next one.
Yeah.
Okay, thank you.
So it's gonna drag them down. And right here, I would expect, see how the 200, see how the 200 is sloping down?
Yep.
Right here, right here. And then we get the cross.
Yep.
So what happened?
Okay.
Let me see. They did a fake cross. Right here, got a fake cross right here. Because it was fighting it. And that's what you got to decide. Sometimes you got to throw out the moving average strategy out the way. You got to not throw it out the way because it might not work. And that's why easy, like sometimes he won't trade it all when it's force up like this. He'll say like, oh, there goes my, I can't short today. So he won't short at all. He's slowly starting to add more tools. So he's starting to take long trades and different types of short trades. But he already got his strategy lasered in. And I don't recommend you guys start adding different strategies until you got your strategy lasered in and you have grade A and grade B at least. So Dell and Luna already have that. So they'll be, just keep in mind that your grade B, let's just say your grade A is 75 to 80% accurate, right? Where it goes in your favor. The grade B is going to be like a toss up. It's going to be 50-50. So your job is to primarily use your grade A setup, especially on your first trade. When you're in your first trade, you want to use the one that has better odds, right? It's like going to a blackjack table. You got two kings, you got 20, or you got two nines. You know, the dealer might most likely beat the two nines, but it's hard to beat, the two tens or the two kings. So you're putting the odds in your favor, and just keep that in mind. Try to take your grade A first. If there is no grade A, then you can weigh the odds on taking a B grade. But just maybe have different, you guys can create different rules where if it's a grade B, maybe you have a tighter stop. If it's your grade A setup, then maybe you have it a little bit looser stop. And that's what I recommend. But other than that, if you guys have any trades we can recap, let's jump in. You guys should be able to share your screen if you guys are sharing.
I can go over one trade that helped me out actually. This was actually on the 10th.
Oh, and one last thing, create rules around your setups. You're gonna have different rules for grade B and different rules for grade B. Um, as we'll be reviewing your rules next week. Remember, rules can be like, hey, do I see a fair value gap? Do I see a balanced price range? Do I see volume levels um, being hit? Do I see buyers coming in? Whatever it is, you want to ask it as in a question. Narrate. It's like you're a playbook. You know, you're a Shakespeare. You're freaking writing down the script. But yeah, go ahead, jump into it, though.
All right, you guys can see my screen?
Yep.
Okay. Um, this was a trade that I took on the 10th. You know, I saw the fair value gap and the way with the price. Remember I told you how I see a wick, I'll draw a line.
Mm-hmm.
So it bounced off of it. And I decided to wait to see what ends up happening because, you know, I wasn't sure of the movement. Then it, you know, came back up. I was like, all right, if it passes this line, and I saw this fair value gap, let me wait and see what ends up happening.
Mm-hmm.
So I decided to wait for the 10x and I got in with the contract. Now, what I didn't, because I didn't look at the volume. I did notice the RSI. So I was like, oh, it's gonna bounce off to 50. I saw the MACD was kind of curving up, so I'm like, all right, this is a good play. But I got stopped out. So that, you know, it hit the bottom, because that I hit my stop loss is the bottom of the fair value gap. So it actually tagged. So what ended up happening, I was like, okay, you know, took it easy. And as I'm watching the play, like you said before, I've noticed it was hovering on the 50.
Yep.
And then it went above back to where the previous fair value gap was. And then I had a confirmation. So I said, all right, I'm gonna actually wait. So when it actually went above again and came back down, I actually got in with 3 contracts on this one. So I was able to close one contract, you know, at like 2.5 points.
Uh-huh.
Since it was 3, because I wasn't trying to go for like 5 or 10. I was like, all right, since I got 3 now, because I normally do 2. I closed one at like 2.5 points because this drop created a fair value gap. It didn't, I noticed it and I was like, that's why I said, you know what, let me close out one contract real quick if it shoots up to this line. Which that's when the fair value gap actually came up and I had one profit take at 2.5, which I was able to split the profit, hit the target. And from there, I actually saw it still hovering over, it started moving above. And I was like, all right, let me have my my stop loss just in case, because I have a feeling it's not gonna go. But then I saw the trend lines and it was really working with the trend lines. And I'm like, okay, this actually might work. Let me not close out the trade. Let me let it play out and see what ends up happening. So I was able to hit this target because my overall target was actually this other wick that I had from previous days, like the nobody wick.
Uh-huh.
Because I have a image up here, so that was actually my main target. But I wanted, like I said, get one at 5 points and let the other one rise. But that was where I wanted to stop with the second contract. Let it play out. It took a while, but like I said, seeing it hovering over the 50, RSI started curving again. But since I got burnt the first time, I was a little skeptical, but I let it play out and it actually hit my second target. It came back down to play. I let it play it out. And I saw, like you said, the 50 moving up. I saw everything like, all the moving averages are moving up, but then
Yep.
I just let it go. So when I closed the contracts, this is where I was at, as far as I was up ahead, I had one contract going. So I closed, like I said, the second contract. And my third contract actually did hit the top level. And I was actually was able to get out from a red to a green, and that was it for me. I was like, all right, that was a lot to process. So I took, I just didn't trade the rest of the day.
And that was your only trade for the day?
For that day, Tuesday, yeah. Oh, not Tuesday,
No.
Wednesday. I'm sorry, Wednesday.
And that blue line, what's that blue line right there?
These blue lines are the previous day fair value gaps. Like when I see where I see if there's consolidation, I'll use those fair value gaps from previous days as a marker. So I'll just draw the line and I'll have them. If it's a red line, it's a previous day red value gap. If it's blue, it's a previous day green green fair value gap.
Okay.
And that's seeing them because usually they'll dance around and they'll consolidate. And that's how I know, that's how I started using that as a confirmation. Like, all right,
Okay.
is it really strong? If it is really strong, it should pass it. Because like I said, these lines are the wicks. So when I saw it bouncing off the wick, and I'm like, oh, okay. Even though it showed me a fair value gap, I wanted to wait. But then when I saw this going under, I was like, that's why I didn't get into the trade all the way until I saw this point. When it bounced and it came right back up, that's where I started to take my trade.
So these blue lines down here, right here, these ones were previous day fair value gaps?
Correct.
Scroll down a little bit. Yeah, I was gonna say maybe the RSI would help you get in over here, but that would be too hard.
Well,
That would be definitely
it
too hard.
because my thought process, let me go back up top. After it broke this fair value gap, and I was like, okay, I didn't see anything else. I didn't really see. I didn't want to just jump right in because of anything else. I wanted to see that long wick fair value gap. Then I know, like, okay, there's a play coming. Like once I see this, my mind triggers like, all right, something's coming. So once I see that and I waited, like I said, I saw this wick line and I saw it past it because it didn't pass it previously. My mind is like, all right, we may have some strong confirmation. The S10 SMA is pointing up. We should be good to go. You probably get yourself, I can't really, I should have wrote down how the market was because I had a strong feeling it was going to reach this wick line that I had, which also matched up with the previous fair value gap. So that was for me, like that was the end point where I knew I was closing out regardless, but I wanted to catch. That's why I had two contracts initially, one for 5 points and one for, I forgot how, yeah, that would have been another 10 points up here. So
see how it looks like over here? That's what I would have wanted to look like over here. See how it came back, broke that level, and then came back and tagged it and held it, and it held that previous day fair value gap? That could be your B grade setup
okay.
from a previous fair value gap or the BPR. Whichever one you think is more reliable. And we can always test it out, right? For 1 week we can do the BPR plus the fair value gap. And then if you're not getting good results with your B grade, the next week we will do the fair value gap with previous day fair value gap plus the RSI.
Okay.
Or, it's up to you what you want to do.
I mean, I'm starting, like I said, after this, I think it was after this trade that I didn't trade, I was watching the video with the BPR and started getting a better understanding.
Yeah.
So once that ended up happening, like I said, days after, it was this one really helped me. Like I went over it and I looked at it. It really helped me, like I said, work for confirmation. Look for confirmation when it came to the trade.
She's seen it.
Yep.
Maybe she was talking about your jacket because your jacket's so cool.
Oh, she's on a sweater.
Maybe she must have. She's a little kid,
Besides
you
this
know?
one, the main one where I would say Thursday was actually the good one. Like, it wasn't, it was working on trying to figure some stuff out.
Mm-hmm.
This first trade was, I saw it going short because we did have the BPR. I waited and I was like, okay, I really wasn't planning to get into the trade
Uh-huh.
because I wasn't sure. Because again, I just saw the video yesterday and I wanted to keep watching the video. So I waited. I let all this go down and then I looked at it and I'm like, okay, there's momentum. I can actually, I know we could probably tag to 666. So let me actually pick it up from right here. And once we tag, I'll get out. And that was the first part of the trade. Because right there was a part from
Okay.
once I knew I saw the MACD going under the zero, like under, that's how I felt more confident. Because usually I try not to go in looking for a long if it's under the zero or trying to go short if it's over the zero.
Everybody over 70.
So that's how I know I'm actually
Don't worry about anybody.
getting, I'm not looking for like 20, 30 points, but I'm looking for something at 5.
Mm-hmm.
So that's what ended up happening. Once I got that going, I closed out one contract at 5 points, which was like right in the half. And the second one actually, when I actually hit the 666. And that was it for me. And I think that's where I was able to get like 20 points off of that downtrend. So once that was done, I switched back over to MES because this was on NQ.
Mm-hmm.
I switched back to MES, saw this short trade on the 5-minute. So this I was comfortable with because I saw the fair value gap. I got in with 2 contracts, was able to ride it down to, again, this wick that I drew out from previous. That's how I used the confirmation. I closed one contract here. The second one was actually on the red, close to the red, a little short of the previous day fair value gap. So I was able to get like 16 points off of that. So 2 contracts, closed one up here, second one actually on the 666.
Yes.
So after that, I think, yeah, just drew this just to, I think this was the extra picture that I took. It was basically the same thing. Now, my practice trade off of this, was it this one? Oh, no, these pictures, this one. Yes, this one I took another trade, actually, and this one actually worked out, looking for a few points because now I didn't want to go too crazy. 2 contracts sold. I was able to get 5 points from here. Trend line was holding because that's what made me actually get into the trade when I saw it really holding that trend line. There was no green volume beats at all on this trade from at the bottom over here. And that's what actually caught me to get, because when I saw this one, there was another fair value gap. I was actually able to hit my second target. So, and that's where I closed out and I was actually good. But this was actually on NQ, and this is why I did it a second account, because I didn't want to, that's my sim of my sim. Just testing out, adding trend lines, really using it and stuff like that. So that's what ended up happening. And I think on this day, this is where I actually took a long from right here, from this green value, because I saw it consolidating. BPR, I actually didn't wait for the half because I knew the 666 was right here. I just wanted it to mount to 666. Once it mounted, I actually did get it over here on this wick. And I rode it up to the actual green over here. and that was it. I had 2 contracts on NQ, and that was it for me. Hello?
Yeah, we're not able to hear you before, so now I can hear you.
Now you can, oh, no, I stopped. That was really it. So
Okay.
I didn't hear anybody say anything, so I'm like, did I lose sound? Okay, so I didn't, so
No, I
okay,
got a call.
okay. Oh, he got a call, okay.
No, you're good. You're good now. Have you seen any difficulties getting in trades, getting stopped out, or any of that? Are you having any issues with that?
No issues getting stopped out. Besides the one, yes, that day Tuesday, I actually got stopped out, but that prompted me to actually start using other things for confirmation.
Yep.
So,
And you were
'cause
able to
that-
reset, right? You were able to reset and get in and turn it green, you said, right?
correct, right away. Once I saw it, and this right here, like I said, I saw it come up and it bounced off the red, and I'm like, okay, I didn't jump right in just because it was here. I waited till it got back to the levels where I wanted to, where I felt comfortable, which was that fair value gap. And I was like, okay, now let me still try to continue my trade. That's why I even put second attempt, because I knew I felt confident in the trade, even though I did get stopped out. I had to try to focus on what it is that I didn't see that got me stopped out. Because I thought I was doing, I saw it coming to the 10 SMA. So I'm like, all right, that's pretty good right here. It should bounce, it should bounce and continue moving up.
Yep.
But that didn't play out. It actually came down and actually hit the way past and stop, hit my stop.
No, that's good. That strategy provides, a pretty good stop out, and you're using other um indicators to kind of confirm that that level is extra strong. I like that. Um, and I like that you let the play out, because it came back down almost to red, and then you let it play out because it wasn't even near your stop and you got in.
Yeah.
Um,
'Cause I think last week when we didn't have class, the same thing kind of happened. I think it was on the 4th, where I used the 30-minute and the 10-minute and the 5-minute to actually do a couple simultaneous trades,
mhm.
which actually worked out for me. This one, let me check.
Mom, do you have my other one?
Yeah, it was actually the 3rd.
I think I might. Do you need it right this second?
No, no.
So,
I'll get it for you. I think it's.
I
gold,
drew my
right?
fair value. This is what a fair value gap that I drew, because I saw this
Mhm.
and then the red line was coming in.
Every time I use it, it
Um,
just-
Okay.
And this was the 30-minute actually. So I created a green off the 5-minute because of this green candle. And when I looked at the 30-minute, I saw this red fair value gap. So I'm like, okay, I'm not sure what's going on, but one's telling me it's going high, but this one's telling me it's gonna go short. So I actually combined them together in one of my charts. I actually put them both together because I was trying to figure out how to do it.
Uh-huh.
So I went with the 30-minute because I felt like it was a higher time frame, so that was gonna actually trump the 5 minute, which I
Yeah.
was able to get. I was able to get in, and I was able to get 5 points off of it, because again, I wasn't trying to do 2 contracts. I just wanted to see how it would work out. So I did get 5 points. Then it retraced back to the fair value gap over here. So I was able to get in and replay it. This time replaying it, because I'm looking at the squeeze, I'm looking at everything else, and I'm like,
Yeah.
yeah, it's gonna shoot up and it's gonna go back down. So I was able to get another one for 5 points.
Nice.
And I kept replaying it. Go ahead.
What I was gonna say, now that BPR kind of showed you how to play those now, right? Where
Correct,
it's
yeah.
combined. If they're combining, then I would just mark off like the middle level, and then
Mm.
if it breaks that level above it, comes back and confirms it, then it's gonna go up. But if it goes back and retests and confirms that level, then it's gonna continue going down.
Correct.
And that can be your level to play it that way.
Yeah, because I was able to get the short, and after
Mhm.
when it actually mounted and went back up top from, I was able to play the long on top of that from there.
Nice.
So
I like that. Awesome play. So it seems like you're getting pretty good with it. Um, I think you just working on narrating the chart in front of you.
yeah, I'm still working on that.
Um, write down those questions that you should be asking yourself, or that you could ask yourself, and write them down as your trading rules. Cool. Thanks for sharing. Luna, do you have any trades?
Yeah, a couple only, not many. Let me just to share screen.
How often do you usually trade? Like, how many trades do you usually take a week?
Depends on the time. Like last a couple of weeks, it was very slow in the trading anyway, and I was busy at work, so I wasn't able to trade much. And the setup, I was always waiting for this proper setup, and it doesn't come up. So I wouldn't say last week was or last few weeks were the usual, but normally I do at least a couple every day.
And you want to be trading, because I know some of us have work and stuff like that, so I know we can't trade all the time, but do you want to trade 2 times a day, 3 times a day?
Yeah.
You shouldn't be trading more than 3 or 4 times a day, actually. Anything more than 5, you're way over trading.
Yeah, no, I'm not looking to do more than 5, but the thing is the timeline. My objective hopefully is to trade from, let's say, 9 to or 9:30 until 12, and then
Yeah.
I can move on to something else. But
Yeah.
sometimes in that time zone or time frame, you don't get the opportunities.
Mhm.
You might get them at 12:30. Yeah, right.
Yeah.
Yeah. So that's the difficult part.
Yeah, sometimes you'll be able to catch them in that window, or you might be able to find a window that's better for you. Because I know there's moves that happen. Remember, futures is open, and that's the best part of it is futures is open, all night long. Not saying that you should stay up all night watching it, but
I tried overnight. I never made $1.
it's slower. But once you get okay, Asian opens from 3 to 6, okay, and then Europe opens from midnight to 3 or whatever it is in your time zone.
Yeah.
And then you start seeing the moves, and you can get up or whatever. But sometimes even after hours, as soon as it opens at 3, which is 6 p.m. your time, sometimes there's moves. But you just got to be patient, a little bit more patient, because it is a lot slower.
Yeah, and Luna, that's actually a very ideal time frame for trading. I try to not go outside of that myself. And so what you might find is that when you identify the setups that you like and you get like a really crystal clear idea of what they look like, it might become easier for you to spot them during that 9 a.m. to 12:30, 12 o'clock. I like to be done by 12 o'clock. When my life is hectic, I like to be done by 11, you know. And those setups, those reliable setups do come up during the time frame, you know. There will be some days that they don't, because I have those days as well. Those days are really, really good for you because you get to practice not trading and not having FOMO, which is really awesome because trading can become pretty compulsive. One thing I would recommend is, and you can do this or not, but when we trade pre-market, a lot of this info that you can trade from drops at 8:30, talking Eastern, 8:30 a.m. And so that might mean getting up somewhat earlier, and it might just not be your thing. But I ideally try to trade 8:30 to 12, and I think when you like really crystallize your setups, you'll be able to find them.
Okay, thank you.
Sure.
Yeah, that's definitely the benefit of being able to wake up earlier. You know, like me, I gotta wake up at 3 or 4 to be able to catch the 5:30 play. But that just comes with the business. And you guys gotta start thinking as you're trading as a business. Don't think of it as a hobby. Think of it as a business, and you gotta create systems and playbooks. You know, standard operating procedures are one of the biggest things in business, and you gotta do that with your trading. Once you do that, you're gonna be in a different mindset where you're actually starting to create good habits, good routines, and then you're gonna laser in your playbook, your strategy, and your rules to be able to make that business efficient and consistent. And that's what you want to be, is you want to be consistent. So show up every day, even if you don't trade, show up every day just to look at the chart, take a glance every now and there. Yeah, you'll need a break. You know, you need a um, some R&R just to um, just get a mental break from looking at the charts all the time. Yeah, so jump in. You have any screenshots you can share?
Yeah, I can give you some. Okay, let me just share here. Okay, so one of them was this one. So basically, this is where I waited for the cross.
Yep.
And then it went down all the way to the 50 SMA, and this is where I entered on. Let me just make this bigger. Just so basically, I made my entry right over there,
Mm-hmm.
and it just kept it all the way to the target. So that was my target was 5 to 6 points, which reached it 1516, and
Nice.
that was like a perfect setup and perfect.
Yeah, person,
Uh,
good
yeah,
execution.
yeah, it was good. The other one,
Go up to the RSI. One thing you want to put on the RSI is that 50 line. I recommend that. Like draw a line. I like on your chart on your Ninja Trader.
oh, over here. Oh, there is a line. I know. Oh no.
There's a grid, but it's
Yeah,
kind of faint.
you want a nice
Oh,
line where that 50
oh
is.
yes, yes, yes. I see.
Yeah.
I have it on 70 and 30. I don't have it on 50. You're right.
Yeah.
Yeah, I'll
Because
do
that
that.
where your move pulled back where you got in, it looks like it was interacting with the 50 SMA and the 50
Yeah,
RSI
right here. Yeah.
conjunction. And that's
Yeah.
like that's one of the golden indicators, not on its own, but you know, when you mix it with your other stuff, it's like I get a lot of my confidence from that 50-50.
Yeah. No, normally I do look at the number on the side. It tells me like what number, it's 50
Yeah.
or
All right.
yeah. So I do pay attention to that. I don't have the line, but I
Yeah.
do look where it is. So you're right, though. I will put a line. It makes it easier. The
Cause
other one, yeah.
The only reason why I would say draw a line is because instead of being focused over here, you're focused where the price action is. You know what I'm saying?
Yes. Yes.
So it comes down, it tags a 50. You know, if you look at that line, it's tagging the 50. And what is it looking like around the 50? Like, is it gonna lose the 50 line? Is it going to hold the 50? That's what you want to see. And having that line there will help you see that better instead of looking at the number because your eyes are off to the left or I mean to the right. Um, but yeah. No, awesome play, dude. That's
Yeah,
what
this
patience is. So
yeah, this one actually I was a little bit hesitant. There was a lot of
red
red,
volume beats.
but
Yeah.
this one was the highest, so it was pretty good. And when I saw this guy over here, I said, okay, no, I'm in, I'm fine.
Mhm. Yeah, for
Yeah.
sure.
So I just left it and to reach. I was thinking, oh, should I cut it off or but then when I saw this, I just let it go. And here it reached the target. The other one,
Actually,
uh,
I want to point out a
yeah,
little something here. This volume, I was looking at the volume too, and I was like, huh, it's like it's interesting that this trade worked out because there's no like nearby volume that's big. But then he pointed out that the green volume from back there was the biggest one completely, which is absolutely true. And it's also it's the volume bar that kind of brought us up into the consolidation zone. Semper in general are like the larger bars that bring you up to a consolidation zone to be like, do you include those in the volume beat strategy or do you usually use the one after it? You know what I mean?
Yeah, I usually try to avoid those because those that can be them. Yeah, it's coming in, but that was the impulsive move.
Right.
So I would have started from like this green doji hammer, right? Always hate. Oh, from like right here. So from there down. So I would start from right here and go this way. So these would have scared me a little bit, but it's still like I always say, look at the red volume bars. Um, they're pretty big, but then they start to get smaller and smaller. So the
Hmm.
sellers, and then right here, right where he got in, there's a bunch of green coming in. So that was probably buyers right here at the 50 right here. Oops.
Yeah. Yeah, Luna, this is an awesome trade. As soon as he put up the screenshot, I was like, fuck yeah, that's the look. That looks good.
yeah, it doesn't happen all the time that way. But this one was clear.
Yeah,
It took some time. It
yeah.
wasn't like this was from the
That's good
time
though.
from the time of the cross. It was 12 something all the way to entry 130. So it's over 30 something minutes, 40,
Yeah,
Yeah.
but
just to
that's good. That's like
yeah,
really good. Yeah.
that's a lot of patience.
Yeah,
Yeah,
exactly.
patience. And then you gotta keep an eye on that MACD down here. Scroll down a little bit.
Yeah.
See how I almost did fake cross, but the histograms were going down and then it never crossed the zero line. And then it
Mhm.
crossed. You got the cross right there. And then you got it right there, right before the big squeeze up over here. So just keep an eye on the MACD as well. Cause that could have told you like either stay out. Cause if you would have got in right here, oh, I'm getting the cross. You know, you could have got in right there. And you got in at the bottom of the range. So it didn't even come back down. And look at the wave of the MACD. Even though it was still flat, it was getting smaller and smaller.
Yeah.
So the MACD can be like, okay, even if I get in here, I can tolerate it. But if the MACD starts to go like this, then you know to stop out and just let it stop out.
Yes, absolutely.
Cool. Good trade.
The other one was not good, but the time I think was not very good either. Got stopped out. It was, yeah, this one.
Short.
It was
You're going short.
this one I
long?
went short. Can we just this.
Hey, what does oh, I was gonna ask you what CU meant, but it's the cross.
Oh, cross up
Yeah, right on.
and then E for entry. So
Oh, but
here,
you went in short or you went in long? No, you went in.
this one I
You
went in long. Yeah, because it went all like the cross, and then I'm waiting for it to come down to the
50.
to the 50, and it did. It tagged the 50, and this is where I got lost because it went up over here, and I took it right up above. So remember, my
Yep.
eyes were seeing green over here
Yeah.
above
Yep.
this, so I took it. But it went right away against me, and I got stepped out like in seconds,
Let's see if it.
or minutes.
Let's see if it. Scroll down.
Let me close it. some more.
Yeah, it looks like. It looks like it would have been below the 50.
This is
See
the
right?
50. Yeah, it was below 50.
Yeah. See.
So if it's below 50, I shouldn't be going long on this. And
No.
it was doing
No.
as higher lows. So
Yeah.
obviously it's going down. Yes, now I see it.
And that's why the 50. If you would have had the line right here, it would have been like, oh, break the 50. Because remember when it's tagging the 50, and this is what I told Easy. When it's tagging the 50, you want to see it tag the 50 over here too. You want to see it tag the 50 RSI line. You don't want to see it bust through the RSI line and then pop up. That's what you don't want to see. You want to see, and that's why having that line, if you had it right here, you would have been like, oh, it broke the 50 right here, and then it came back and tagged it. So you know that it's going to go down. But if you went like this, oops. But if it was like, yeah, let's just say it was like it hit the 50 and then you got in and then it hit the 50 up here, then the chances of it going up are more in your favor.
Okay. Well, mind you, we added the volume and RSI, but I was just looking at the volume. I didn't know how to
Yeah.
use the RSI properly.
Yeah.
So now I understand you. Once you explained it today, this is very good. So now I
Yep.
understand what's going on.
Yep.
But over here, I looked at the volume. It was big, high, and it didn't get beat. So this
Yeah,
is
but remember the volume, we don't use those legs up. We only use the volume beat in the consolidation though.
oh, okay.
We don't count the big moves up.
The big moves. All right, all right, all right.
Because
Okay.
the big moves, that's obvious. That's what the buyers were. But in the
So here I
consolidation
should be looking.
zone, see like this, you would have started your consolidation zone from
So from here, I should be looking at this.
like once it tops out, whenever the top out candle happens, right?
Okay.
That's your consolidation zone. So look at this big red bar. That's telling you that the sellers are in.
Okay.
The sellers took over right there. Because sometimes you'll get this big red bar like this, but the volume will go like right here.
Mm.
Right? But that was a big red bar and that was a big red volume beat.
Okay. So I should consider after the big, well,
Yeah.
drive up, the big candles up. I should be careful now. After that, these are the consolidation. Okay.
Yep.
Including the one with it, even if it's a big drop.
Yeah, even
Okay.
if it's a big drop, because you want
Okay.
this is a move up, and then it right here it started consolidating this little candle, and then
Right.
it broke down. So then that's the range right there. So
Okay.
then start comparing that down here.
Oh,
Start comparing that volume down here from there to there. And you're like, okay, red volume beat, red volume beat. But like I said, you sometimes you get big red candles and the volume bar will be almost the same or it'll be a little bit smaller.
Mhm.
And that's what you gotta look for. And that's why I say look at the price action. Does the price action meet the volume? If the volume meets the price action, okay, good. Okay, RSI, read it like a book from top to bottom. Price
Okay.
action first is going to give you a signal, whether it's a moving average or price action. It's going to be like, okay, let me look at volume. Okay, it looks like sellers or buyers might be getting in control. In this move, I'm looking for, yeah, I got the cross. So you're telling yourself, I'm getting the 1050 cross. I got a big move up. Now that it broke the 50, I want a back test of the 50. Okay, so back test of 50. And usually you don't want it to smash that much above the 50. Because what's this, the 100 right here?
Which one?
This one right here.
The 100 is the green. This one is the 666.
Okay, so that's your thing. So you don't want price action to smash the next moving average. You want it to hit the next moving average, not smash through it. Look at it and smash through it.
Yeah.
Because usually
Okay.
what I like to see is okay, go right here, come back down, tag it, and then go up, and then come back and tag it. You always want it to bust through and come back. Right here, it busted through 1, 2,
3 moving
3
averages.
moving averages.
Yeah.
So now it's gonna when elevators up, it's gonna stair step down. And elevators up, it's gonna stair step down, and that's exactly what it did here. Especially look, it should have went to the 50, right?
Mhm.
It should have went to the 50. It came back down, hit right here, came back up, kind of shied it, came back down to confirm this moving average, smash through that moving average, come back down to this moving average, and then go up.
Yeah.
But it didn't do that. It went too fast up, so now it has to correct down. And then
It
right
went through
there.
4 moving averages actually.
Mhm.
1, 2, 3, 4. Well, 3 and the EMA. So
Yeah.
smashed. Yeah.
So
You're right.
you got to be careful with that.
Okay.
And like I said, volume. Look at volume. Like volume B. Right here, there's buyer. But then you see lower high, and then right there. And then right there again, you see the sellers coming in. But hey, you'll learn this. This will come with time.
Oh
You
yeah.
start just burning these pictures in your head, and you're like, okay, now I know what price action should look like versus what it shouldn't look like.
Absolutely.
If you have any questions or you have another trade,
No, that's it for today, I guess, for me. Just to have those two. I did experiment with volume profile a little
Yeah.
bit. Yeah, but that was because I'm reading the book and I'm trying to understand it, but that's about it. I didn't do.
Yeah, we'll show you how to do that in about a week or two, how to add and how to use the volume profile. Hopefully it matches up with how what you're reading in your book.
Yeah.
But maybe add the MACD now. Add the MACD. So you'll have the volume, MACD, and RSI.
I have the MACD on a different screen though.
Oh, okay.
Yeah, I have the MACD on. I think it's on the Trading View because I have Trading View, which is I use for the charts.
Mm-hmm.
So I have the MACD there.
Okay.
Yeah.
Just make sure, like usually, you get the RSI or the MACD cross. Like 2 or 3 bars later, you'll get the MACD cross.
Okay. The 5 minutes we're talking about?
Any of them,
Oh, okay.
any MACD on any chart frame. It's usually once you get the RSI cross, 3 to 5 bars later, you'll get the MACD cross. And if you got that, then that's 2 catalysts stacked together. And then you got the 50 SMA or whatever or the 10 SMA. Remember, you have your grade B now. Your grade B is break above the 10 and then, higher low.
Yeah.
And it has to be somewhere in the RSI. Either at the overcool and it creates a higher low off the overcool line. That's one confirmation, or if it confirms below or above the 50 RSI, and then again, above the overheat. Cause, yeah, and then just make sure you put that line on the 50. It's gonna help you. It's more like a guide, it's not like it's a definitive line. It's more like, okay, if it hits this, then it can be a potential resistance, and then that's when you look at the charts to see if there's any resistance on the chart.
Okay. I'll add it.
But cool. Like I said, the next week, take 2 contracts and trade at least twice a day, and with your strategy, or at least try to, because that might help you find a different time slot. Like if you're busy, like let's say you're busy one day and you can't trade in the morning, and then you're like, well, I can come back later at lunchtime or at power hour, and I can trade that for, at least an hour if a play develops. And then if I can't trade that, then I can trade after hours. Like that, you have at least 2 windows you can always try to at least trade. The best action is going to be at the open. That's like always, or even at 5:30 my time, which is 8:30 Eastern time. There's good plays at that time too. So if you could wake up a little bit early, um, like I said, you got to be in the right environment. You don't want to be, you know, like running out the door, getting ready for work or whatever, and you can't concentrate or focus on trading. Because you're gonna make a bad trade or a bad decision, and it's gonna end bad. But cool. I guess we'll end it there. Um,